So joining us now for more on the impact of that meeting, Larry Hatheway, Chief Economist and Chief Strategist at UBS Investment Bank. Thanks so much for coming in this morning, Larry.
Great to be here.
Good to see you. So what do you think about the outcome of the G20? Disappointing?
It's difficult. It is disappointing in the sense that it's very hard to find common ground over these issues. And if we step back for a moment, where the G20 really stepped in was during the crisis, when immediate crisis prevention was required. There was broad agreement about what needed to be done. That was great. But since then, as we now go more into this sort of long-term planning process where national politics really becomes a key ingredient, you see the consensus break down. So it's not surprising that we're struggling at this point in time.
I want to ask you about the unrest currently engulfing the Middle East and North Africa. This morning on the markets, we're seeing risk aversion. That means a boost for the price of gold. Oil is also rising. Silver is at its highest in 30 years. How concerned are you about what's going on? I
think we have to be concerned. It's a fluid situation. It's very difficult to tell in some cases what's actually happening, and it's even more difficult to tell how this is all going to play out. But when we think about sort of the impacts coming back to the world economy, to financial markets, then of those that you cited, the rise in oil prices, the rise in food prices are clearly concerns. They feed back into some of the unrest in that part of the world and possibly could spill over elsewhere. And ultimately, we do have to worry about the inflationary consequences as well as the consequences for growth. So these are things we have to watch.
Exactly. I mean, as the G20 meets for the first time this year, it would seem that inflation is a bigger risk than weak growth to many of these economies, right?
It's coming onto the radar screen in ways that it's been absent for some time. That's largely because of these headline price effects from commodities. But there are central banks who've been struggling with inflation. The Bank of England is a good example of that. But equally now, the ECB is looking much more closely at inflation in the context of other things. For example, the strong data reported this morning on Germany, and for that matter on the EU as a whole, against the backdrop of inflation being some 50 basis points above the sort of target level of the ECB. Well, that does raise questions about just when the ECB is going to make its step with monetary policy.
So with inflation becoming a problem, or it's starting to get on the radar, as you say, do central banks need to take a tougher approach to price pressures? Do they need to start tightening monetary policy?
I think it depends on where you look. I'm not convinced, for example, here that in the United Kingdom it's time to do that. I think that some of the inflation, of course, is due to hikes in the VAT and some special effects that are not necessarily going to find their way into broad-based price and wage increases. I think the ECB, whether we believe they should move or not, is more inclined to move. And again, I cited one reason, which is that inflation's above target, but the other is that most of the Eurozone, probably 2/3 of it, is growing above trend. The output gap is closing. Unemployment rates are coming down. Think of Germany, lowest unemployment rates in some 18 years. Those are usually the preconditions where a very, very accommodative monetary policy is normalized. So I think, yes, we will probably see the ECB moving in the course of this year.
And the U.S.?
Less likely. They could possibly move before the end of the year, but I think the Bernanke Fed has stressed at least let's say the core constituency there that you still have a very large output gap. Core inflation running at or around 1% is below the Fed's target. The Fed has always been happy to strip out these other effects, and quite rightly the Fed views the rise in food prices and to some extent the rise in energy prices as sapping from purchasing power and therefore actually something that could inhibit growth. So I think they'll still remain pretty cautious. Of the three I mentioned, they're likely to be the most cautious central bank.
It's not just oil prices that have seen a bit of a spike. Food prices are rising as well. Do you think we're going to see more intervention by governments around the world in global food markets?
I think so. Various governments have already imposed export bans, for example. I think you'll see some further efforts to try to subsidize food prices so that they shield the domestic population from the increases. In China, you see efforts there to try to boost local food production through various forms of subsidies. To be perfectly honest with you, this is really a time for world leaders, though, in the context of, say, the G20, me to really go back and think very hard about Doha. The one thing that the Doha round would have done was unleash agricultural production in certain parts of the world, for example, in Africa, where there's great potential to increase supply of foodstuffs, which would obviously put somewhat of a cap on these upward pressure in prices. And that's the best policy response we could see, although it's very difficult to do it in this environment.
Very briefly, Larry, inflation, high food prices, possibly higher oil price off the back of what's happening in the Middle East and North Africa. What does this mean for investors?
Well, investors are getting a bit nervous. After all, we've seen a pretty strong run here, uninterrupted in developed markets since the end of last summer. And for a lot of them, that signals, oops, time for pause, time for a correction. And what could the catalyst be? Well, it could be these jitters around both inflation, but also around the political concerns that you've mentioned.
Do you expect equities to take a bit of a dive?
I'm not sure that they're going to take a dive here, but I think there is a chance here that the market is going to have to sort of essentially gather itself, think about the implications of this, watch in particular what happens to oil prices, and maybe only when there's signs that some of this is settling down can the market then regain its upward momentum.
Larry Hatheway, Chief Economist, Chief Strategist at UBS Investment Bank. Good to talk to you. Come in again.
Great to be here.